What's going on, everyone? And welcome. Get ready because today we are tackling international financial reporting standards. If you are looking for help with this topic, I am confident this video will be useful. A quick heads up, if it helps you out, be sure to like, subscribe, and share it with a friend. Let's go to it. Today, our topic is International Financial Reporting Standards (IFRS). Viewers, International Financial Reporting Standards or IFRS is a set of accounting standards developed by the International Accounting Standard Boards or IASB. These standards are designed to bring consistency, transparency, and comparability to financial statements globally. What is IFRS? IFRS are principle-based standards, interpretations, and the framework adopted by the countries to guide the preparation and presentation of financial statements. It ensures that financial statements are understandable, comparable, relevant, and reliable. IFRS is used in over 150 countries, including the European Union, Australia, Canada, and many Asian and South American nations. 160 countries out of 168 countries adopted IFRS 2001 onward. Australia, European Union, and South Africa joined this program in 2005, New Zealand in 2007, China in 2008, Canada in 2011, Argentina and Russia in 2012, Japan in 2016, OHADA in 2019. Key objectives of IFRS are global comparability of financial statements, transparency for investors and stakeholders, accountability to users of financial information, and efficiency in capital markets through standardization. As of 2025, there are 17 active IFRS standards issued by the International Accounting Standard Board (IASB). These standards cover specific areas of financial reporting and are used globally, with local adaptations in some countries. List of all FIRS standards along with a brief explanation. IFRS 1. First time adoption of IFRS. Guidelines for entities transitioning from GAAP, Generally Accepted Accounting Principle, to IFRS for the first time to make financial statements transparent and comparable. IFRS 2. Share-based payment. Accounting for payments made in shares or stock options, including implied stock options. IFRS 3. Business combinations. Accounting for mergers and acquisitions, how to measure goodwill and assets or liabilities. IFRS 4. Insurance contracts to be replaced by IFRS 17. Temporary guidance on insurance contracts before IFRS 17 becomes fully effective. IFRS 5. Non-current assets held for sale and discontinued operations. Deals with classification and measurement of assets held for sale and discontinued business segments. IFRS 6. Exploration for the evaluation of mineral resources. Accounting for exploration cost in the mining and extractive industries. IFRS 7. Financial instrument disclosure requires companies to disclose risks, valuation, and uses of financial instruments. IFRS 8. Operating segments requires reporting financial information by business segment or geographical areas. IFRS 9. Financial instruments. Classification, measurement, impairment, and hedge accounting for financial assets and liabilities. IFRS 10. Consolidated financial statements. How a parent company should prepare consolidated financial reports for its subsidiaries. IFRS 11. Joint arrangements. Accounting for joint ventures and joint operations, shared control investments. IFRS 12. Disclosure of interest in other entities. Disclosure for subsidiaries, joint arrangements, associates, and unconsolidated entities. IFRS 13. Fair value measurement. A unified framework for measuring fair value of assets and liabilities. IFRS 14. Regulatory deferral accounts that has a limited use and provide temporary guidance for entities subject to rate regulation, mainly for utilities. IFRS 15. Revenue from contracts with customers. The five-step model to recognize revenue from goods and services. IFRS 16 Lease. How to recognize and measure lease contracts. Most leases now appear on balance sheet. IFRS 17 Insurance Contracts. It replaces IFRS 4, provides a comprehensive model for insurance contract accounting. Note: IFRS 17 became effective January 1, 2023 and fully replaces IFRS 4. IFRS 14 is an interim standard and rarely used. IFRS 6 applies only to companies in extractive industries, for example, mining, oil, and gas. IFRS is supported by the conceptual framework updated in 2018, which underpins all standards. Thank you very much for watching the video.